have to find out that in case 1, whether these costs are relevant, and in case 2, whether these costs are relevant or not. Just to find out that whether these costs, sales revenue, direct material, variable manufacturing overhead, they are relevant in case 1 or in case 2. Okay, so I'm just going to give you 5 minutes to read the question and then try to do that. I think I should set up the break-even point first. Sorry, a breakout room, not break-even point, breakout room first. So let me set up the breakout. Here we go. So this is the group activity. And I am going to give you 10 minutes, 15 minutes to do that. Okay, so okay, room 1. This is a 15 minutes class activity, and it's a group activity as well. Okay, try to do that in the relevant range. Yes.
5:55, right?
What?
9:55. The time?
It's just I'm gonna give you
15 minutes.
15 minutes to do that.
Okay.
Yes, by 10 p.m. Okay, I'm gonna be canceling this breakout room, and all you have to do is send the group pictures, group work to the group of our WeChat group. Okay. If you have any question, you can call me to this group as well. Hello.
Hello, sir.
Hello.
Okay, please, one of you guys, please share the screen here so that everybody can do the group work. Okay, it's not an individual work, it's group work.
Okay.
Please, one of you guys, please share the picture. Yes, your screen here. If you have any question, you can call me to this group. I'm going to give you 15 minutes to complete your group work.
Okay, sir.
Okay.
Do you have the question?
Oh, yes, sir.
Yes,
Okay.
we have.
So this is a group work. So I'm going to give you 15 minutes to do that. Please, one of you guys share the question on the screen here. And if you have any question, please, you can call me to this group as well.
Okay.
Okay, those who are learning or who are watching this online, so I'm going to be just pausing the video for 15 minutes. And after that, I'm going to be recording the video again. Okay, guys, I'm going to be canceling the breakout rooms. Okay, Jackie, Stella, did you finish?
Yes.
Yeah, sending the picture to the group.
Please send the picture to the group, and let's talk about its solution as well. So I have also pasted solution here. Still people are joining here. Okay, so Ayana is here? No? Leo? No? Okay. Okay, good. So here is the solution here. The sales are relevant in case 1, but in case 2, it is not relevant. Right, guys? Please compare the answers. The direct material is relevant in both cases. Direct labor, it is relevant in the case 1, but it is not relevant in case 2. Variable expense, it is variable manufacturing overhead, it is relevant in case 1, but it's not relevant in case 2. Right, guys? So I have pasted a solution here. You can compare your solution from this slide. So all those viewers who are watching this lecture, the recorded lecture, they can compare your answer from this slide. Okay, so let's move forward. Now, our second learning objective is prepare an analysis showing whether a product line or other business segment should be dropped or retained. That's pretty interesting. So another purpose of having a relevant costing concept is that it can help you to decide whether we keep producing the product or whether we should drop the product. So one of the most important decision managers make is whether to add or drop a business segment. So ultimately, so we're talking about a business segment. A decision to drop an old segment or add a new one is going to hinge primarily on the impact that decision will be based on net operating income. If our net operating income is increasing, we do not drop our segment. If our net operating income is decreasing, we drop our segment. So let's analyze this carefully. So we have a scenario here that is due to a declining popularity of digital watches, Lowell Company's digital watch line has not reported a profit for several years. So Lowell is considering discontinuing this product line. The decision rule is that Lowell should drop the digital watch only if its profit is increasing. So by dropping off this watch segment, if its profit increasing, then they will drop this watch segment. So Lowell will compare the contribution margin that would be lost to the cost that would be avoided if the line was to be dropped. Look at the solution here. So right now the situation is that their sales are 500,000, their total variable cost is 200,000, and they have contribution margin 300,000. So their fixed expenses, rent, general expenses, general factory overhead, salary to the line managers, they are total 400,000, and that's why this digital watch segment is giving us a 100,000 loss, right? Now, the investigation has revealed that the fixed general factory overhead and fixed general administrative expense will not be affected. So whether we drop off the digital watch segment or not, we still have to pay the general factory overhead and general administrative expenses. The fixed general overhead and general administrative expenses assigned to the product would be reallocated to other product line, which means you are in a segment of digital watch, so its general expenses, both administrative and factory overhead, will be assigned to other business segments. So it means this cannot be avoided by dropping off this digital watch. What about others? The equipment used to manufacture digital watch has no resale value. It means we have to throw them. It will give us zero value. So should Lowell retain or drop the digital watch section? Let's talk about that. So you see, the contribution margin is 300,000. Why this is a negative line? Because if we drop this one, we are going to lose this 300,000 contribution margin. So that will be our lost income. So that's why we have a negative sign here. Plus the general administrative expense and general factory overhead would be the same. So that is not a differential cost. So we are not writing down here. Only we can save the line manager salary, the advertisement, and rent of the factory space. That's it. Look at that. We are losing 300,000 contribution margin, and we are just saving on the top of 260,000. So it means we are losing $40,000 if we drop off our watch line here. So here, let me just show you the balance sheet, the income statement of digital watch. So what essentially the question is saying, if you drop off, you will lose that one, right? If you drop off, it remains the same. 60,000 remain the same. Okay, and the general expenses 30,000 remain the same. Only you will be saving general the salary of the line manager, the advertisement, and rent factory. Depreciation going to be 0 because you are going to avoid that one. That's it. So here we go. You are saving how much? It is you are saving 260,000 cost, but you are losing 300,000 profit. Even though the Lowell is giving you a loss 100,000, still it's better to retain that one. Now, this Lowell situation can also be solved by another method, the differential method, which is with and without the digital watch section. Let's talk about that. So we have two approaches. Keep that or drop that. So sales, we will be dropping out. Here we go. The difference is 500,000. Manufacturing of expenses, we are going to save them. So that's for the positive number. Commission 5,000.